Hi, good afternoon. Welcome to Money9. You're watching Market Meter, where we try and gauge the temperature of the markets right now. And well, right now it seems hot. And the markets are not doing well at all since they opened in the morning. In fact, they opened about a percentage lower, and now the difference has gone up to about 2% from the closing on Friday. Not great news at all in the market, and banking stocks are really pulling the day down for the Sensex and the Nifty both. We've got with us Rahul Shah. Rahul Shah joins us to try and decipher, decode what is pulling the markets down. Rahul, what's going on?
Hi, good afternoon. I think what we have seen in last few days, I think some kind of profit booking and obviously two or three things which is visible. One is obviously the US bond yield spiking up, which is almost at 1 year high, which is the major concern which is pulling down the markets. Secondly, the WPI number which came on Friday, below estimates, that is second thing which is pulling up the market from the highs. And thirdly, I think the rising corona cases is one thing which is that fear in the mind is much more higher than than the defeating it. So I think that is one more reason. So I think put together, all three put together, I think which is pulling down the markets from the near term highs.
Right, Rahul. So, in fact, COVID cases reported yesterday were in excess of 25,000 cases, active cases, new cases a day. We are almost at the same levels that we were in July last year. And of course, we all remember the kind of bloodbath we saw on the markets in the wake of COVID last year. So, Rahul, what is your outlook? Because cases are only going to rise. Last year, remember, we also had a lockdown. Right now, we only have a few cities under lockdown, but otherwise, businesses are functioning and people are going out, moving out. So, there is a possibility that cases may rise at a higher clip, faster clip than they did last year. So, what's the kind of outlook that you are seeing for the markets, Rahul?
The Kartik, important thing is what we have to look at is I think the vaccination drive is too long. If we compare between last July and today, so that time there were everything was dark, right? When will the vaccine come? When the thing will start opening up, and what kind of the recovery rates? If we compare it in July and today, it's much more different. Obviously, the fear is always there, as you rightly pointed out. So I think the markets overall looks like in a recovery mode. If you look at the overall economic perspective, the things have been much better, and the signs of improvement suggest that I think there could be some sell-off with some kind of such news. And but this sell-off, I personally feel that should be bought because the kind of visibility in the ground reality, what we are seeing that the picture is much more larger than what it is today. So my sense is, I think one should stay invested and to take an opportunity to take participate into such kind of sell-off.
Right. So, Rahul, we also saw, in fact, some reports coming in earlier last month, which indicated that the upside of the markets by the end of this year could well be in the 61,000 levels for the BSE Sensex, whereas even a pessimistic approach was pegging it at about 55,000. So, where are you placed on this curve? What is your estimation of where the markets could be by end of this year?
I think by just predicting the Sensex levels or Nifty levels, I personally feel that could be a question mark because there could be a sector rotation which we are always seeing in the markets currently, or the sector to sector, the things that keep on changing every quarter. So my view is, I think Sensex levels, if I look at, it could be higher than that also, or maybe around 60 to 65,000 level as well.
Right. And Nifty banks are particularly down today, down about 3%. So is it the bank strike also at play? Do you think people are selling off in fear of the bank strike, or that doesn't seem to be one of the cases?
Kartik, we are in a digital mode, so I don't think so that strikes and all these things matter more. I think if you look at it, the bank nifty sliding, the major heavyweights in the bank nifty are all your private sector banks like HDFC Bank, Kotak Bank, ICICI Bank, Axis Bank. So this compromises of your bank nifty. I think it's just a sell-off, the sector rotation which is happening. So I think there's some kind of profit booking which we saw since, which was visible in banking stocks since last 5 6 session.
Your picks and on the basis of what you are recommending, why don't you run our viewers through what are the stock picks that you advise them to trade in the forthcoming days, please?
Yeah, so my top pick from the banking space is SBI. So we've seen that the wholesale bankers with the recovery in the economy, I think the best placed is the wholesale bankers to get benefited. The last quarter, the numbers were quite smart, which surprised the street and the stock started moving up. Stock is trading at still at 1.2 time book. So I think, and plus the subsidiary valuations what they have. So I think, and what we're seeing is the peak of the NPA cycle. So I don't think so major any mishaps to be coming it up into the next few quarters in the SBI. So my sense is I think one can look at buying SBI, which is reasonably priced with a 20% upside from here of target price of 475 in next 12 months. That's my first stock pick.
12 months as the duration for this, and what happens to to investors in case the target price is achieved much earlier? Sell it off, or maybe hang on till the 12th month and see it rise even further?
I think I would revise my targets looking at the fourth quarter results, how it comes up. So looking at the current last third quarter numbers, I have made my estimates. So my sense is I think if the run up is quite sharp before the next 3 4 months, then I think obviously I would advise booking a profit and maybe a wait for to get into something else.
Right, Rahul. So that is SBI for you. Any other picks that you want to give our viewers and leave them with, Rahul?
I think second topic is my BPCL. I think we've seen that your the way the oil prices have gone higher. I think all OMCs have suffered a lot, but looks like BPCL a pure disinvestment play. We've seen the sell-off from the refinery sell-off, which came around I think last week. Then the treasury sale of stock of BPCL, which garnered around 7,000 crore earlier 9,000 crore. So I think the roadmap is very clear that the disinvestment will happen in near future, and the stock is trading at a reasonably very good valuations. So downside looks quite limited into it. So there could be another I think around 20 25% upside in BPCL or maybe more in that. So that's my second pick for in such markets.
So two very, very divergent companies that you've picked up today for our audiences and for the investors. One is SBI, one is BPCL, and valid indicators for both. Any other recommendation you want to give before we wrap up this show, Rahul?
I think the third stock is Grasim Industries. So I think we've seen the entire cement play done quite well, and last 6 months the prices are on move in the cement prices, and the dispatches numbers have also have been quite good. So I think the proxy to play cement in the listed space through Ultratech is I think the best thing is Grasim, which is an holding company. That's number one. Number two, the core business, VSF businesses, chemical businesses, and now the new venture of paint business. So all these things should do well in coming few quarters. The last quarter's commentary of management also very strong and forward looking. So my sense is I think the stock has already done well in last few months, but I still see some more upside in Grasim. So one can look at buying Grasim with a target of 1650.
Right. So Rahul Shah there giving us three recommendations and all three buy calls today: SBI, BPCL and Grasim. Rahul Shah, thank you so much for joining us on Market Meter. Before we wrap the show, let's quickly look at the broad indices and see where they are trading right now. Remember, we saw everything was in the red, about a percentage down when we had started the day in the morning. But look at it now. Well, we are almost taking a 2% hit, with the BSE Sensex already down about 900 points, Nifty 50 down about 265. And even the small caps which started in the green have now in fact depleted into the red. So that's a wrap on the Market Meter. Thank you so much for joining us on Money9. Of course, for all news and updates, do visit our website money9.com and also follow us on social media at Money9 Live. Thank you so much. Have a nice afternoon.